Welcome back now to our next conversation. Later today, the National Bureau of Statistics will be publishing the Q2 2022 GDP report for the domestic economy. Ahead of the release, Shegun Adams, research analyst at Afrinvest Research and Consulting, is joining us now for expectations and performance of the economy and implications of the current events. Great to have you, Shegun.
Thank you for having me, Ladi. Trust you are having a great day.
Yeah, it's going just fine. So we're expecting those results. And considering the multiple domestic and external headwinds we've seen in Q2, what are your expectations for the GDP data?
Thank you very much. So before I delve into the GDP data for Q2, our expectations, I would love to provide context given the Q1 number which we've seen. So by way of refresher, recall that we saw real GDP growth of 3.1% year-on-year in Q1 2022. This is against 0.5% in the year before, that's Q1 2021, and around 4% in Q4 2021. And then when you sort of dissect that growth, you see that the non-oil sector actually grew by 6%, which was impressive. I'll come to that in a bit. But in the oil sector, we saw a contraction of 26%, which was a record low. When you look at the performance of the non-oil sector, it was pretty dismal, considering this was a period where we had global rally in the commodities markets. Oil prices averaged around $99 per barrel compared to $71 per barrel in Q1 2021. But sadly, our oil production levels dropped significantly. We dropped to around 1.5 million barrels per day, which was not impressive considering we did 1.7 in Q1 2021. And when you come to the non-oil sector, then you see that we saw some impressive numbers. 6% looks a bit decent, but then you have to understand that it was against 0.7% in Q1 2021. So there's that sort of base there. But when you look at sectors such as agri did around 3%. You look at sectors such as finance and insurance with 3%. You look at sectors like you look at ICT did 12%. You look at trade 7%. So these sectors, which are labor elastic sectors, they sort of performed very well. And when you look at the economy in terms of structure, then we've talked about agri. Then you look at agri, which comprises around 22% of GDP. It did around 3%. Then you look at services, which account for more than half of the economy, it grew around 7%. But one thing about the Q1 data that we should pay attention to was that industries actually contracted by 7%, which is not good. So for an economy like Nigeria, we have to grow our industries. That is how we can unlock productivity in the economy. And while agriculture and services are okay, but we tend to see that activities around these sectors that are low productive activities. So for an economy like Nigeria to unlock strength, then we have to improve. So with that background, coming into Q2, we expect that GDP should come at around 2.6% year-on-year in Q2. And the reason for this is that we recognize that Q1, there was sort of some base effect that was favorable. But also, when you look at the factors that have shaped the Q2 2022, then you sort of understand where we're coming from. For instance, you see domestic inflation continue an uptrend, unrelenting, and it reached as high as 18.6 as of June. 17.7% prompted CBN to deliver a rare interest rate hike, you can recall. When you look at PMI data also, even though PMI went into expansionary region, that's above 50 points in June, but you see that in May was sort of in a contractionary zone. This period also coincided with significant FX pressure, rising energy costs, which accounts for a significant part of companies' overhead costs. So when you look at, broadly speaking, in terms of economic agents, you see that the government was struggling there with revenue. Households were struggling to, under the weight of inflation, to finance consumption. And you see that firms today were also struggling with high operating costs. So when you put all of this together, we sort of we're expecting it 2.6%, which is also not very bad. A 2.0% will imply 2.9% overall in H1, which if you trace the data back, it's as impressive as you can get up to 2015,
Right.
where we had 3.1 in H1.
Okay, but looking at your expectation of 2.6%, what would the implications be for the economy if that's actually what comes out?
Yeah, and thank you very much. And I think it's a very important question because we have to put context numbers. Say, for instance, myself and you and I, if we're able to create a value of 500 billion, and then there's a second group that creates a value of, let's say, a trillion, and then you want to sort of evaluate performance, it will be good to understand the facts behind the number, per head, what was the value creation. So for an economy like Nigeria, you recall that as of 2019, based on official data, the NBS reported that 4 in 10 Nigerians live below the poverty line. This was before COVID, this was before the Ukraine war, before rising energy costs, before all of these headwinds that we're currently witnessing. One thing that we have to pay attention to is how well is this economy growing. I think if you look at the data, we have a population growth rate of 2.6%. At 2.9%, which is also our full year outlook, the growth looks a bit higher than population growth, but it's not very significant. And then when you zoom out, look at the 10-year trend in Nigeria economy, discover that we have grown by around 2.4%. Globally, based on World Bank data, the global economy has grown around 2.6%. Sub-Saharan Africa has grown around 2.7%, but Nigeria has done 2.4%. It's not very impressive. When you look at countries with large population like China that has done 6.6, India around 4 or 5%, you tend to see that our economy is not growing optimally. And this has negative implication for poverty. World Bank expects that in addition to 6 million people that earlier projected to enter poverty line, an additional 1 million people will fall below the poverty line. So the implication of what we are seeing is that 2.9%, it's fair, but it's not good enough, and we have to do more. Even if you look at the economy from other perspectives in terms of inequality, gender participation, you tend to see that the economy is not growing as well as it should. For an economy that's projected to overtake the United States by 2050 as the third largest. So I think we have to put in more effort.
Yeah, all eyes on China at this time. But, compared to other countries, after exiting, the lockdown phase, due to COVID-19, how's Nigeria performed, compared to our peers?
Well, when you look at the sub-Saharan Africa, it tends to say, okay, let's say South Africa, which we have some sort of rivalry in terms of who is the biggest and all of that. But you see that post lockdown, most countries have done pretty well. South Africa, from a contraction of around 6% in 2020, did 4% in 2021. Q1 number was pretty decent, and it was able to reach pre-pandemic levels. But you sort of see that the same kind of story is playing out across the board. Then you have new headwinds in terms of the Ukraine war. You have the normalization of global monetary policy, which has led to interest rate of across developed markets, and this has sort of put pressure on currencies across emerging markets as well. You have a lot of these challenges playing out. You also see the case where there are issues peculiar to the country. South Africa has issues, electricity generation. You have Nigeria, our FX issues. So by and large, I think we're doing okay. When you want to compare with South Africa and the likes like that, they have IMF projects like 2.4% growth at the end of 2020 to Nigeria 3.4. So when you want to put that, well, I tend to say I will not want to force to do that comparison. I would rather that we look at the economy and the peculiarity of the economy and address those issues that are inherent to that economy.
All right, Shego Adams, we'll be watching out. We'll be watching out for that data. It's going to come out sometime later today, maybe about 12. When it comes out, we'll drill down on that next week. Thank you so much, Shego Adams, research analyst, AfriInvest Research. It was great having you.
Thank you for having me.